Good morning, welcome to a morning review on Wednesday the 20th of January. This is Kim Watson speaking for Easy Trader. So looking at the euro dollar first, and as we can see yesterday we were pretty much worked in the prior day's range. We actually managed to spill out the bottom and the top of that range, but this morning for the Asian session we're already pushing back up. We've broken yesterday's highs already, still in this sort of wedge type pattern. It's still quite messy and from a daily perspective, but as I said yesterday, we're still putting in generally higher lows, and most of the price movement is running in that vein. So it's erring towards maybe the bullish side in general. However, whilst I look at this market from an hourly perspective here this morning, what I'm noticing from here is we've got an untouched daily pivot, which has a reasonable probability of being hit. And we're sort of doing a load of shooting stars at the moment into these into this sort of supply area that we had previously. So I was to pop this on across the top of those prior candles there, and you see we just running back into that sort of supply area again, a small through the Asian session here. Not really managed to get much of an inroad into that yet. Now there is a possibility we could continue in this vein and move up towards that R2 pivot and the previous highs. Certainly a possibility there, but from what I'm looking at here, it could just as easy roll a little bit. Very steep move up here. May want to come back towards at least those 21s, maybe even the daily pivot. So just be careful what we're doing here. This I think there was marginal divergence as well at these highs here in terms of price-wise in the RSI. So there is a potential for a bit more of a retrace. Looking at cable yesterday sold off following the Bank of England's Governor Carney suggesting there's not going to be any increase in rates for a while yet, and the outlook doesn't look particularly good. And we just saw further softening of the pound dollar. It broke the prior lows there, and we're sort of near 5.5, 6 year lows now where we're sitting. So we're sort of running into that territory. There's nothing stopping us continuing this way. We've got the monthly pivot below us, the S3, which at 140 may provide some sort of support if we get down there. When you look at what's happening here, it's easy to think, well, we're going to get a bounce soon. We talked about it yesterday, and we traded a partial bounce, but then it just rolled over again, and this is what we've been seeing quite a lot of. From the RSI point of view, it's down in that sort of extreme scope. You think, well, can it go any lower? Well, yeah, when the markets are like this, it sure can. So we can't be just as much as it's really sold off, and there may be opportunities on the long side. There's nothing I can do really quite yet, and would be looking for in terms of just continuing to sell. Maybe I'd say maybe opportunities to the upside. So looking at the upside, we've got the daily pivot, which is a reasonable probability of being hit. So that's one thing I'm looking at there. Let's just drop a trend line across here, break this sort of area, may see us run towards the 60s, and maybe that daily pivot is a reasonable probability of being hit. Likewise, a break down to the downside and the continuation could see us running down towards that S1 area, so an S3 area. So it would be reasonable targets to the downside. Now, if this breaks before 8, I'll just wait and reassess it, but I'm really looking for the potential of that pivot to be taken out. Dollar yen. Looking at dollar yen, we've broken the lows here. Strengthening is become, once again, it's risk back on through the Chinese or Asian session. China is still wobbling there. They haven't suggested they're going to do some more easing as expected, or the type of easing expected, and we've seen this sort of effect, and money runs back to yen in that region during that period. So I just clicked on the button too much. There we go. Now there is a bit of divergence going over these lows, but there's no guarantee that we'll get an immediate bounce with the state of things that we're seeing at the moment. For hourly, coming back to an hourly point of view, we've already caught the daily pivot. We've already run through the R1, the S1, S2, almost at the S3 there. Maybe shaping up for a bit more of a bounce from here, but the overall drift is got to be really the easiest route is to the downside. So any bounces, we may be looking at short sides into the 21s if they're moving down later on. But at the moment, I'm not really too keen on doing too much there at all. Aussie dollar. Now, as soon as there's a bit of a problem with China, Aussie dollar gets really quite hit, and it's sold off again through the Asian session, back down towards the S3 monthly pivot there. It's been putting in slightly higher lows there, but overall it's looking easier to the weak side. And again, whilst it's there's a possibility of a retracement from these from this S1 area, I'll be more inclined to sell into any strength effectively. So back to the 21s, I'd be looking to sell it rather than trying to buy it back to the 21s in this particular case. Canadian dollar had a hard old time, the Canadian dollar, with the weak oil prices. So oil's been off. I'll just flick an oil chart up here first, really. Oil's off again. It's back down to $28 a barrel. The chances are this could weaken further. I still think we could see a $25 barrel and maybe below. And it's working in that direction. So this is only bad news for the Canadian dollar, which has got a high correlation with the price of oil. And so we could well see this continue in this mode and maybe up to its monthly R3 there. Remember, this is US dollar stroke Canadian dollar, so it's a weakening of the Canadian dollar going on here. Below us, we've still got the weekly pivots, but I don't think there's much chance of that being hit unless the price of oil takes a flyer all of a sudden. We've also got the daily pivot below us, which is untouched, which generally will get hit. There's a good probability of being hit. I think with the fact that it's already up at its R1, it may have a bit more of a struggle unless we see oil this morning starting to take a bit of a rise. Doesn't need to rise too many dollars. A couple of dollars may just do it. We could see the Canadian dollar come down. But again, just like the Aussie, I want to be on the side of the US dollar against it. So I'd really, if any retracement, may look at possible buying into the 60-20s. But there's not a lot I can do at the moment either way whilst it's sitting like this. Could possibly trade it back to 60-20s, no guarantees in terms of what's happening. There is a bit of divergence. There's never any guarantees for these markets. Okay, so that's the technicals out the way. Let's have a quick look at what's going on from a news point of view today. We've got 9:30 in the UK. We've got the employment figures coming out. Now, after what was said yesterday, I think they'll probably be dulled down again. But if there's any sort of negativity there, we could see the pound sold off quite strongly. Any positivity, well, we may see a blip to the upside, but I think it might be short-lived because of what, as I say, it's a bit more of a game changer of what Carney said yesterday than anything else. Looking through then the rest of the day, Canadian dollar, we've got data coming out 130, US dollar, also we've got data, we've got inflation figures, CPI coming out at 130. These could be a little bit of a mover because again, they're sort of building the hopes of any further increase in the interest rates in the US based on inflation and employment. And well, any signs of weakness in inflation here could soften the US dollar a little bit here. And it runs into negative territory. It's just more likelihood that the next increase will be further away. And finally, at what we've got at 3 o'clock, we've got the Bank of Canada's monetary policy. So may get some volatility in the CAD at 3 o'clock this afternoon. Crude oil inventory as well. That's may be becoming at 3:30 a bigger thing because as all this oil's slashing around, there's possibly the fact that there's so much of it now that the storage facilities are starting to get full up, which will put further downward pressure on oil. So if you trade in oil and the Canadian dollar around about 3:30, we could see a bit of volatility around that point. That's it for me. No other news there. So I'm going to finish this recording. I'll catch you in the morning.